Okay, let's talk about gold. It has been on an absolutely explosive run lately. And, a rally this big, this fast, well, it's making a lot of people pretty nervous. So we're going to dive in and figure out what is really driving this market. And this, right here, is the million-dollar question, isn't it? Is this massive rally a trap? After a surge this powerful, are we just waiting for the floor to drop out? It's a totally valid concern, for sure. But the answer, well, it might not be what you think. There's this gut instinct we all have. You see a chart that's practically gone vertical and you think, okay, what goes up must come down. But reacting like that just on instinct means you might be missing the real story, the one that the market structure is trying to tell you. So first things first, let's look at the price action itself. Why does this rally feel so scary, so unsustainable to so many people? Honestly, it just comes down to the sheer speed of it all. Yeah, we are not talking about some slow, steady climb here. We've been seeing the market gap up, where it opens way higher than where it closed the day before, and then it's just followed by this relentless buying that keeps pushing it to new records. That kind of explosive move is bound to put anyone on edge. So, to get past that feeling, that emotion, we need to become detectives. Let's look at the hard evidence. We're going to break down the chart week by week and see exactly what clues the market has left behind for us. All right, let's rewind the tape to the week of January 12th. The market opens around 45.20. It rallies all the way up to 46.43, but then it closes the week really strong at 45.95. What this gives us is what traders call a bullish candle. It's a crystal clear sign that, yeah, there was some back and forth, but by the end of the week, the buyers were absolutely in charge. And this is the part you really got to focus on. Throughout all that volatility, at no point, not for a single moment, did the sellers manage to grab the steering wheel. Every time they tried to push the price down, the buyers just stepped in and absorbed it. That right there is a huge tell, a sign of some serious underlying strength. Now, let's fast forward to this week. The pattern didn't just repeat itself. It went into overdrive. We got another huge gap up open. The price just rocketed from 45.95 to a new high of 48.95. So the daily momentum, oh yeah, it is firmly, without a doubt, still with the buyers. Okay, now we're getting to the real heart of it, because looking at price is one thing, but smart traders, they use another tool to see what's happening under the hood. It's like a secret gauge that tells you if a rally has fuel left in the tank or if it's just running on fumes. This tool is called market dominance, and the best way to think of it is like a fuel gauge for the trend. See, the price tells you how fast you're going, but dominance, that tells you how much horsepower, how much conviction is actually left to keep this thing moving forward. And this chart, this is the real story. Right now, on both the weekly and the daily charts, bullish dominance is sitting at around 60%. That is considered a healthy, strong, sustainable trend. The danger zone, what we call the exhaustion zone, where you start looking for reversals, that doesn't even begin until you get over 80%. We are nowhere near that. And that right there is why the whole it's going to crash argument feels so weak when you look at the data. Okay, so we've established the trend is healthy, it's not exhausted. Now, let's zoom out. Let's get the view from above and see what other signals the market is sending and what other forces are at play here. Now, this is a classic trap people fall into. If you look at a really short-term chart, like the 1-hour chart, you'll see some early warning signs of a potential pullback. But here's the key. That's just a warning. It's noise. For a real change in direction, that little warning signal has to be confirmed on the bigger picture, on the daily chart. If you act just on the 1-hour noise, you're going to get run over trying to fight a powerful trend. So what's the magic number? What's the level we need to be watching on that daily chart? It's this one, 47.55. Think of that as the line in the sand. If and only if the price closes below that level on a daily basis, it signals a shift. But listen close, it doesn't signal a crash. It signals the start of a healthy pullback, a breather, before the next potential move up. It is not a crash signal. And then finally, when you look at the bigger economic picture, all the pieces just kind of fit together. The VIX, the market's fear index, has actually calmed down a lot, which helps prevent a panic selling situation. But at the same time, all the geopolitical uncertainty in the world keeps buyers interested in gold. This combination, it's the perfect recipe for what we're seeing, these sharp rallies followed by controlled, orderly pullbacks. So, after digging into the price action, looking at the underlying structure, and checking our secret feel gauge, what's the final verdict? Is this rally a trap after all? Well, the evidence seems pretty clear, doesn't it? The weekly structure is bullish, the daily momentum still belongs to the buyers. And most importantly, that market dominance gauge is healthy. It is not exhausted. So based on everything we can see, this trend is still very much intact. And really, this all boils down to one simple idea. The goal isn't to be a hero. It's not about trying to perfectly call the absolute top of the market down to the dollar. The goal is to read the evidence, to follow the structure that the market gives you, and to wait for confirmation before you decide that a powerful trend is over. And that kind of leaves us with one final thought to chew on. With gold, we just saw that the headline price, the scary number on the screen, wasn't the real story. The strength behind that price was. So it really makes you wonder, what other stories, what other market narratives are we all just accepting at face value right now without taking a second to look at the real strength or weakness that's hiding just beneath the surface?